look, anytime that you have a hack, people obviously get worried about this. But the way that I describe it, the Treasury and the Fed has never been hacked. The further you get away from the creation of the money point, then you get less secure. Banks have been hacked, armored cars have been hacked, or people have had money stolen from their wallet. Same thing in crypto. The blockchain itself, the Bitcoin blockchain, has never been hacked. But if you go and you take that, you put it in an exchange, or you put it in some sort of custody solution, those can get hacked. And so I think it's important to pay attention to. The most impressive part to me, though, was this was a $1.4, $1.5 billion hack. Customers obviously were worried. They ran to the exchange. They withdrew $4 billion. No problem. And so obviously the exchange had the money. Right. Usually what we've seen is when these things happen, the exchange gets caught, not having the money or there's some sort of issue. But I think that really the system kind of worked how it was supposed to, and now they're going to work to try to recover that $1.4 billion that was taken from them.
What are you thinking right now, just in terms of price of Bitcoin? We keep looking at it. It's off the highs. Some people have talked about it going to $250,000, $500,000, $1 million. Where are we on that journey, if that journey is right? We've had other people come on and say there's a floor at 70,000, and we still have these big debates about strategic reserves being built, but we also have big questions about what the Federal Reserve is going to do.
So I think if you look trend, not specifics, right? Everyone's going to come out with these price targets. I have no clue where the price is going to go in terms of exact number. But what I do know is that in these bull markets, historically, we've seen very big drawdowns. In 2017, Bitcoin went up about 20x, but there were 6 different drawdowns of 30% on the way to that 20x in a single year. What we've seen lately is actually those drawdowns are much more muted. So you're getting about 15% drawdowns. And so what that tells me is, one, there's a persistent bid for people who want Bitcoin. But second is that there likely is going to be less volatility to the upside as well. Right. Now, the beauty of Bitcoin is that less volatility to the upside means that maybe we go up 10x off the bottom.
We just talked about it last week, Anthony, that finally it's acting like something that almost could be used as a currency because it's been 95,000 basically for 8 weeks. Do you think if the Fed doesn't cut this year, is there any reason for Bitcoin to go out? It's so, I mean, it just, to me, it looks like every time it looks like an easing cycle is coming, that's when it goes. And when it looks like it isn't, even though it's counterintuitive because you get a hot inflation number. That's why you supposedly own things like gold and Bitcoin because of inflation. But a hot inflation number means the Fed doesn't cut. So, yeah. and then Bitcoin goes down.
Yeah, there was this great study done by this guy, Sam Callahan, and what he basically said was Bitcoin is the most sensitive asset to global liquidity. So global liquidity is really, really important to pay attention to.
Well, that's just a risk-on thing.
To a point. Now, the other thing I'm paying attention to is this idea that's being popularized by Jim Bianco, which is the Mar-a-Lago Accord. And basically the idea is that the dollar's too strong, and instead what we're going to use is we're going to use tariffs, we're going to go and we're going to use the sovereign wealth fund, and then we're also going to get payment for security. Those 3 things, the general idea is to reduce the debt, get interest rates down, and weaken the dollar. If you're able to do that, I think that would be very good for Bitcoin and for stocks. And so the question is, how successful are they going to be in implementing this plan? We know the sovereign wealth fund is coming. We know that they're implementing the tariffs. Can they get the payment for security in Europe is another question. But I think that these are all things that they're trying to do, and that would be good for asset prices. Coinbase specifically, I don't think many people were not buying Coinbase stock because they had this lawsuit going on of this regulatory issue. And when the lawsuit was dismissed, you didn't see a big pop in the price or anything. So I don't think that from a company perspective, people were really worried about it. It was kind of par for the course. If you were a public company in crypto, you likely had a tussle with the regulators. But what I do think it does is it signifies a changing of the guard, right? You're going to drop this and they're saying, hey, moving forward, we're going to create clear rules and regulations. We want to actually encourage this innovation. We want to be supportive of the industry. And so the dropping of that case is
that's a large part because the industry decided to support Trump and put a lot of money into this administration.
Look, one of the
behind this administration.
Yeah, one of the weird things about, I think, business and finance is people have become much more political. And when I get asked why did people become more political, I always say that I don't think business and finance people were more interested in politics all of a sudden. I think what happened is that politics and regulators started to meddle in business and finance, and those people realized either we start to participate here or we're going to get steamrolled.
What do you make, though, of just a broader conversation about money and politics? Because clearly the money is what's had a huge impact, right? There was not a lot of money going into, the Biden administration, and they had whatever their view was of crypto. Now there's an administration that had a lot of money put behind it.
Yeah, money in politics is a really interesting thing because on one hand, you have the person who actually raised less money and spent less money became the president in this election. But on the other hand, definitely money is something that is going to change people's mind. But I think that the more important thing for Trump and his administration is that they all actually own these assets. If you go through the cabinet, if you go through a lot of the nominations, they
Right.
own Bitcoin. And so
Is that not trouble you, though? Because I think that you and others have come out quite publicly and said, there have been questions about Nancy Pelosi and her husband, and questions about all sorts of folks in Congress who have owned different stocks or assets, and people have said this is totally wrong and totally conflicted. Now this administration owns all of these assets, and everyone's like, it's fine. And actually, it's a good thing because they understand it better now.
So that's a double-edged sword, right? I actually don't think people have a problem with politicians owning stocks. One of my favorite stats is Ken Langone once gave an interview, and he said that his average holding period is 42 years. People aren't really worried about what decisions he's making on a day-to-day basis. I think the problem that people have is when you're actually actively trading around certain events that are occurring. So it's the action of trading versus just holding for a long term. Same thing with Bitcoin is if we have people who are actively trading Bitcoin based on different things that politicians are doing, I think that would be a problem. But if people are just buying, holding, dollar cost averaging into...
How do you feel about meme coins then? President and the president's wife.
Yeah, I think that meme coins are a pretty big distraction from what actually is going to end up being the work that people need to focus on. And you see that, Strategic Bitcoin Reserve, I don't see anyone talking about putting meme coins in there. I think that there is an understanding that there's kind of an entertainment angle to a lot of this industry, but the really serious people, the people who want to go and actually have a positive impact on the country and on the economy, they're focused on Bitcoin.
SEC is now dropping its investigation into Robinhood over its cryptocurrency business. The brokerage firm just saying that the agency sent a letter last week explaining that it had concluded its investigation and does not intend to move forward with an enforcement action. This does follow a Wells notice that was sent to the trading firm in May of last year. Those typically inform a company or a person that they are under investigation, and they tend to come before a lawsuit. Robinhood's chief legal officer, Dan Gallagher, who was also a former SEC commissioner, stated in a statement this morning that, quote, "We applaud the staff's decision to close this investigation with no action." And he says this investigation never should have been opened. Robinhood Crypto, he says, always has, always will respect federal securities laws and never allowed transactions in securities. He also goes on to say, as we explained to the SEC, any case against Robinhood Crypto would have failed. He says, we appreciate the formal closing of this investigation, and we are happy to see return to the rule of law and commitment to fairness at the SEC. This is, guys, the latest win for major cryptocurrency companies in this new administration. Many backed Trump's campaigns, and you're seeing a lighter regulatory touch here. Companies had a pretty tense relationship, to put it lightly, with the former SEC chair under Biden, Gary Gensler. Many complained of what they called regulation by enforcement instead of the agency setting any type of clear rules or guidelines. It does follow the big news, guys, last week with the SEC dropping its lawsuit against Coinbase.
Welcome to the Crypto Teacher, and I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you join the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. And also, guys, make sure you go like and follow the TikTok. More videos to come. And we have Pump on CNBC speaking about the Bybit hack, the $1.4 billion and the $4 billion bank run. But Bybit and crypto withstood the hack. But guys, you know how I feel about hacks, especially when you're talking about that type of money. And we have Pump speaking about volatility, saying it won't be as bad because we have the whales still buying Bitcoin. And yes, that's going to hold us up for a little while. But guys, we clearly see the Fed shrinking liquidity, and that hits all assets. I don't care whether it's Bitcoin, crypto, gold, all assets will take a hit because of all that money printing. And now it's time to shrink because it's time to build. But we know the Fed has plenty of ammo, and also Scott Bessent at the Treasury. Now we have Gary Gensler out the way, and guys, they're clearly setting up crypto to take a fall for this legacy market. Because since Gary Gensler has been out, these meme coins have went crazy. And regulation is coming to this space in the United States. And we know when that regulation comes, they're going to put these assets in the control of the Fed and these big banks. And remember, the Crypto Teacher told you. And a lot of these SEC lawsuits were just movies to kick the can down the road for regulation. But now, guys, it's time for regulation to come, especially for these stable coins, Because remember, stable coins are the foundation of this new economy. On top of it, these stable coins are programmable, being able to tell you what, when, and how to buy, and you have 3 to 6 months to spend it or poof, they're gone. And remember, the crypto teacher told you. And we have Trump on tariffs, says they're coming next Tuesday. And guys, the only thing we have to do is sit back, get your popcorn, and let it play out. I told you these tariffs are being timed with the Fed. And since we have these tariffs coming in, everybody's talking about no income tax, no property tax. Remember, guys, why they're doing it. Remember, they're speaking to the corporation. They're not speaking to you. They know these machines are about to take over this economy, and the sheep are going inside the metaverse. If you don't have a job, you're not paying it anyway. But unfortunately, the sheep are asleep. And remember, my people perish from the lack of knowledge because they reject it. And we have Warren Buffett selling stocks, no buybacks, sitting on a pile of cash because he knows a crash is coming. And he'll be able to buy everything pennies on the dollar. Do I think that crash is near term? No, I don't. I think we're definitely going to get a correction. The Fed still has 200 basis points it can work with. And then plus, we know Scott Bessent has ammo also. But once these tariffs start to ramp up, we have the BOJ start to raise rates consistently, and BRICS make a big move off the dollar, that is definitely going to crash global markets. Remember, guys, they're destroying this whole legacy market, and that's globally, not just the United States, but of course, that dollar is the reserve currency. And we clearly know they want to devalue this dollar to get us on a level playing field, get rid of this debt, so therefore they can bring in the machines, give the sheep free money. And we saw the simulation ran during the C word. Free bread, free circus will equal the metaverse. And remember, the crypto teacher told you, because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
I'm wondering if you believe that this critical minerals deal with Ukraine represents a de facto security guarantee by the United States, since the U.S. would have an interest in protecting those reserves in Ukraine. Thank you.
We're on time with the tariffs, and it seems like that's moving along very rapidly. We've been mistreated very badly by many countries, not just Canada and Mexico. We've been taken advantage of. We were led by, in some cases, fools, because anybody that would sign documents like they signed, where they were able to take advantage of the American people, like has happened over the last long period of time, except for a little 4-year period that took place 4 years ago. But anybody that would agree to allow this to happen to our country should be ashamed of themselves. No, the tariffs are going forward on time, on schedule. This is an abuse that took place for many, many years. And I'm not even blaming the other countries that did this. I blame our leadership for allowing it to happen. I mean, who can blame them if they made these great deals with the United States, took advantage of the United States on manufacturing, on just about everything, every aspect that you could imagine they took advantage of. I look at some of these agreements, I'd read them at night, and I'd say, who would ever sign a thing like this? So the tariffs will go forward, yes, and we're going to make up a lot of territory. All we want is reciprocal. We want reciprocity. We want to have the same. So if somebody charges us, we charge them.
Subject their citizens to higher taxes, such as higher property taxes, to pay for these spending habits. And these property taxes, it's like you buy a home, you buy land, maybe you buy the home outright, but maybe you pay off a mortgage over 30 years. And then, okay, you've paid off the mortgage, you bought the land, you've been taxed many times. It's like, is it your property or not? Just for being on your property, you got to write a check to the government every year. So you're basically paying rent to the government to live on your own property. And our homestead exemption is not strong enough to help these folks because the property gets assessed so high. And that's the thing. If you buy a home for $300,000 and there's certain tax, well then what? 10 years later, they say it's worth $700,000. And so, and they say, there's homestead stuff that helps protect you to a certain extent, but you're paying more.
We need to bring down the income tax, eventually down to zero, because you deserve to keep what you earn. It is your money, not the government's.
And then they're sitting on the cash. So the one thing that I think disappoints investors, but really shouldn't, is the buybacks, and he hasn't bought back stock since May.
Talk about it, $325 billion. Yeah. It's the largest cash pile that any company, any public company in history has ever had. It's greater than if you even add up today's numbers from Apple, Microsoft, and Alphabet, and they all have some pretty big cash hoards. Right. What do you think the plan is behind that? Why do you think he's doing it?
He's wound down a lot of the Apple position, Bank of America, so that's, those were two things, contributing to that cash. Plus, last year they generated $30 billion of operating cash flow, which was about $600 million per week that would end up on his desk to be allocated. So this is still a very strong cash-producing enterprise. But this is all a good thing. I think people do get impatient in the short term. And, if you go back to a few of his letters a few years ago, he talks about, really rare opportunities coming around.
So basically, he's looking around thinking that prices are pretty expensive, including his own stock, which he's not buying back either.
Yeah, so it's trading at 1.5 times tangible book value. So, clearly it's a level, it's kind of the higher, but down 10% is not unrealistic in this market, which has been pretty volatile.
What do you make of some of this cash positioning when it comes to Berkshire Hathaway and the fact that Warren Buffett's saying he's not seeing a lot of opportunities out there?
I would have liked some more elaboration from Warren in that letter, rather than just that one sentence.
But don't actions speak louder than words?
It
if
does.
You're selling more than you're buying for 9 straight quarters, what else did you want him to say?
Yeah, no, for sure. The market trades 22, 23 times earnings. I think we're in the midst of a regime change here in the markets, in the global markets, where U.S. Mag 7 is no longer going to be the dominant driver of overall market gains. And that what we've seen so far, investors are trying to find things in Europe. They're finding things in Asia. It's not just those 7 that are sort of stealing all the market thunder. And I think that that's a major change, at least for the S&P index, which is still dominated by those names. So I think hopefully investors are going to sort of widen their imagination in terms of things to buy.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, well, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. We will, and if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting at more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and you know, when the dealers have to step in to save a Treasury auction, that's a rare occurrence. And
Cryptoteacher and the New World Order book, plus the 3 kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get on stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know, I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. Okay, y'all